Welcome back. As promised, let's talk about Gulf Oil Lubricants, which is the stock in focus today. Posted a good set of numbers in the third quarter, even as margins saw some pressure, down about 120 basis points on a year-on-year basis. The management says they delivered double-digit volume growth in the core lubricants business, while the agri and two-wheeler segment was impacted. Let's understand the demand trends now in quarter four. Ravi Chawla, the MD and CEO of the company, is joining us now. Mr. Chawla, good afternoon. Thank you so much for joining us. Well, in quarter three, you did indicate that B2B was strong. However, B2C continued to face tepid rural conditions as far as demand is concerned. Can you tell us what is the situation right now and what is the split between B2B and B2C revenues?
Well, as you rightly said, quarter three for us has been good, robust growth. We've continued to grow 2 to 3 times the industry. Rural demand, yes, it has the agri products which should pick up in the coming season, and we are preparing for that. Number of initiatives we do in terms of service camps, etc. So I think overall quarter three, the ratio of B2B, B2C was normally it's 60-40, but slightly 1 or 2% below that for the B2C business. All these segments are doing well except the rural slightly, as we mentioned, and motorcycle oils, the prices have gone up. So a bit of, we have announced 2 products which are at the value end. So I think all these initiatives will help us to kind of bounce back and continue our robust 2 to 3 times industry growth.
So you're planning to grow 2 to 3x the industry. You said that you're hopeful the retail will pick up, which was a bit subdued in Q3. In January, in the first half of February, how have the B2C sales been? Have you already seen a pickup? And what would be the comparison, say, quarter on quarter in terms of an improvement?
So normally the second and third month on the quarters do well because the quarter closing, we have a lot of distributor initiatives. And as I mentioned, rural is about 10% of our volumes. That will pick up once the agri season comes up. So we are seeing, as Jan is the first month, obviously, as I mentioned, second and third months, things will do well. So we hope this is a strong quarter. The March end, a lot of the incentives for the trade plus the demand picks up. Commercial vehicle oils are doing very well. B2B is doing very well. Passenger car, where we have a low market share, is doing very well for us. And double-digit growth, I think, is again what we're looking at. And the industry is growing about 3 to 4%. So it should be a good quarter. Yes, the margins are under a bit of pressure because though base oil has stabilized, we feel the additives and some of the foreign exchange is there where we import the base oil. But things are steady now, so it should be a strong quarter closing the year.
Strong quarter, 18% volume growth in 9 months. What will you end the year with? Also because you're talking about a strong quarter and demand as well. Are there any price hikes in the offing as well? What is the outlook for FY23 margins and revenue growth?
Well, normally now the prices have stabilized. So I think it should be that, from here, the prices have reached the peak in terms of costs. And while we look at next year, again, with strong fundamental things happening in terms of investment in infrastructure, all the automotive industry set to grow, we would look at the industry growing again 3 to 4%, maybe a bit higher in the retail market. And as we have done, the outlook is to grow 2 to 3 times that and try to get a band of margin, which I would say currently, we know it's been under some pressure, but this should go up, at least look at 12 to 14% going in the next few quarters. And then obviously it's based on competition and other things. So we hope that we can get this trajectory going for us.
I think battery did about 60 to 61 crores of revenues in Q3. Could you give us an indication? Is this the run rate we should expect going ahead? What are the triggers?
Sorry, I missed your question.
On batteries, can you tell us the game plan and how you can scale it up and margins?
So batteries for us is a business. We have leveraged our brand and our distribution. We do about 100 crores revenue in a year. And we are also looking at local manufacturing of the batteries so that we can improve our margins here. So that project is underway, and in a couple of months that should happen.
Okay, so that's about batteries. EV fluids, you have tied up with 3 OEMs, looking at other 2 OEMs as well. Has it already started contributing, or will it contribute now? And how big of an opportunity here is? You have 200 rupees in terms of cash in books. Will you be putting it in the EV fluids business, or what is the plan here?
So EV fluids is a natural extension of the lubricant business. Most of the EVs coming in have transmission and the greases and the brake fluids. So that's a natural sort of extension. EV fluids, we have tied up with 3 OEMs to start with. Switch Mobility, which makes buses, Alti Green, which makes three-wheeler commercial, and Piaggio, which is into three-wheeler space. So these are three tie-ups we have had already. It's going to be a small percentage of the current volume as it's evolving, but we're also talking to more OEMs. We have a global range. And as you mentioned, we are looking at where we can play in the EV value chain with a good brand, distribution, and definitely relationships. As EV penetration goes up, we have looked at the value chain, and there are certain investments we have made. Globally, we have made investment in a UK car charging company called Indra. And in India, we have tied up with a software as a service company. The board and we are evaluating at other opportunities around the EV value chain. And hopefully we will come up with a few moves there where we want to be a strategic player.
Can you tell us the other two OEMs whom you're in discussions with for EV fluids?
We won't be able to announce till we sign the contract, but I can tell you we're talking to definitely the car OEMs and two-wheeler OEMs. So shortly we will definitely come out with that.
In Q4? Do you think
Yes, in Q4.
In Q4 you'll sign up with. And will EV fluids remain a low margin business for you? When do you think it can start contributing more to your margins?
See, EV fluids is going to be a very small part of the volumes. The core industry, the core lubricants is going to continue to grow 3 to 4% for the next 10 years, 15 years. As you know, penetration of vehicles, most of the commercial vehicles, industrials, and even if you take other segments, the penetration of EV will happen. But we see no lack of growth in the traditional core lubricants. And EV fluids will play, but it would be a small percentage, single-digit percentage in terms of volumes.
All right. Okay, Mr. Chawla, it was a pleasure speaking with you. Thank you so much for joining us and talking about the demand on ground and the outlook going forward as well. That's the word coming in from Gulf Oil Lubricants. Strong set of numbers and the commentary as well. We'll slip into a short break and get you more on markets and stock-specific action. Stay tuned for that.